We all have that dream, right? Owning a little place in Italy, a villa in Tuscany, maybe an apartment in Rome. But what if I told you that exact dream, that romance, is actually blinding investors to a shocking reality? What if the key to one of Europe's biggest investment opportunities isn't in a travel guide, but hiding in plain sight, in a spreadsheet?
Okay, let's just dive right into the data. Because this one chart, well, it turns everything you think you know about European real estate completely on its head. On one side, you've got the EU average, this massive, roaring engine of property value growth. And then you have Italy. Just look at that blue line. While everyone else was on a rocket ship, Italy was quietly going in the other direction.
And let's put some really hard numbers on that. While the average property in the EU shot up over 60%, in Italy, prices actually went down by 4%. I want you to think about that for a second. Italy is the only country in the entire European Union where prices fell during this insane boom. This isn't just a weird trend, it's what pros call a generational arbitrage opportunity, a glitch in the market so rare it might not happen again in our lifetimes.
Now, I know what you're thinking. You see a minus 4% and you think weakness, stay away, but the data, it tells the exact opposite story. See, this isn't a sign of a broken market. It's the result of past issues, like a banking crisis, that already forced the market to correct. For investors today, that means the hard part's over. Italy's market has already hit rock bottom, while the rest of Europe might just be looking over the edge of a cliff.
And it looks like the big players have definitely noticed that market floor. This number, 12.5 billion euros, that is the staggering amount of institutional money that poured into Italian real estate in just 1 year. That's a 23% jump year over year, and it's the second best result in the country's history. This isn't just a little bit of interest, it's a tidal wave of cash.
So, what's really interesting is where this money is coming from. Take a look. Almost 60% of it is foreign capital. This is what we call smart money. These are huge global funds that don't care about romance or beautiful sunsets. They operate on cold, hard math. Their algorithms are designed to find one thing: the best possible risk-adjusted return on the planet. And right now, all those algorithms are blinking red, pointing straight at Italy.
And here it is. This is the magic number that makes the whole thing work: 4.2%. That's the average fixed mortgage rate a foreign buyer can get. I mean, think about that. When you can borrow money for that cheap to buy an asset that's already hit its price floor, an asset that has billions in institutional money betting on it, the profit equation just becomes incredibly attractive.
So, okay, we know why the smart money is interested, but where, specifically, is it going? Well, the secret is understanding that Italy isn't just one market. It's this complex patchwork of tiny microeconomies. The real profit, the real genius, is in what's called geographic arbitrage, basically exploiting the huge price differences between regions that, to you and me, look pretty much the same.
And this slide right here is the perfect example of that insider's edge. The whole world dreams of Tuscany, right? And that famous brand name comes with a massive price tag, 12,000 euros a square meter. But literally right next door is Umbria. Same rolling hills, same amazing food, same great rental potential for just 3,400 euros a meter. Why would you pay 3.5 times more just for the brand name? The smart money doesn't.
And the really sophisticated players are running even more surgical plays. Look at this northern wealth corridor. What investors are doing is combining high-yield commercial property in Milan's financial center with a stunning primary residence up on Lake Como. It creates this powerful synergy, and it's all turbocharged by Italy's very attractive flat tax system for new residents. It's the perfect mix of business returns and an incredible lifestyle.
Okay, now before you get too excited and start browsing listings, we have to talk about the dangers. Because this market's complexity, it's also a minefield. It is filled with million-dollar traps that are almost perfectly designed to catch emotional, uninformed buyers. And trust me, if you don't know the local rules of the game, you are going to get burned.
And the single most important rule is this one: caveat emptor. It's Latin for let the buyer beware. You see, unlike in places like the US or the UK, where there are all kinds of protections for the buyer, in Italy, almost all the risk is on you. It is your job and your job alone to find every single problem before you sign on that dotted line. Because afterwards, it's your problem.
And the biggest trap of them all, the one you've all seen go viral, the €1 house. This quote from the book just says it all. It's not a real estate deal. It's a marketing funnel that tricks you into signing a legally binding contract to spend tens, sometimes hundreds of thousands of euros on renovations, usually on a crazy tight deadline.
And that brings us to maybe the most fatal mistake an amateur investor can make, thinking the public notary is there to protect you. They are not. A notary's only job is to make sure the deed transfer is legal. That's it. They have absolutely no duty to check if the building itself is legal, if it has unpermitted work, or any other liabilities. A notary's signature will not save you from buying a house with massive illegal structures.
So, okay, the market is full of huge opportunities, but it's also a minefield. How do you actually navigate this to come out on top? Well, the data points to a very, very specific strategy, a blueprint, if you will.
The answer isn't something the data calls the qualitative bifurcation. Now, that sounds fancy, but the idea is actually super simple. The market is splitting in two. You see, older, existing homes are kind of just chugging along at about 2.8% growth, but modern, energy-efficient new builds, they are surging by 9% a year. The big money isn't in restoring the old Italy, it's in building the new one.
And that brings us to the core thesis, the whole idea in a nutshell. You have these 4 pillars that have created this fleeting, incredible window of opportunity. You've got super cheap debt at 4.2%. You've got institutional validation with $12.5 billion pouring in. You have a market floor that's already been stress tested, and you have a clear signal for capital to chase that green premium in new environmentally friendly buildings. It's a perfect storm.
So, look, the data is undeniable. Italy isn't just a postcard perfect dream. Right now, it's a massive macroeconomic anomaly, offering this really rare window for huge returns. You've got an upside being pushed by the smartest money in the world, and a downside that's protected by a market that's already hit bottom. The only real question left is, are you equipped with the right playbook to actually seize it?